This is a really great one. I hope you enjoy. Hello, agents. Hello, everyone. Well, I got a super special treat for you today. I'm with Raymond Taylor of the regional sales manager of Sagicor Life Insurance Company, and I'm just going to go off a little bit and talk about Ray and how much we enjoy Ray. He's one of
Oh,
the
thanks.
Sagicor is super lucky to have an individual like Ray working for him. I met Ray when he worked with the Standard out of Oregon there, and I got to tell you, he is very generous with his time. He's a wholesaler that's always come and visited us. And every time he does, we get super benefit out of hearing from the representative of the company about the company. So today, he's going to be speaking with us in regards to IUL, single premium IUL. So here's Ray. Ray, thank you so much for doing this. And you were in our office last week and you told us all this great stuff. And I just can't retain it all the way you do. And I thought my agents would really benefit. I think all agents will really benefit from hearing it from you and your awesome product. And Ray, the floor is yours, sir.
Oh, well, thank you so much, Jeff. Thanks for having me here. I always love working with you and Darren and the great team over at FSD and have for years. So I really appreciate the opportunity to talk to you and your advisors about this. And today I'm going to be sharing WealthCare. Let me see if I can get it up on the screen here. Let me know if this comes through.
There you are. Yeah, you're popping up right there.
Excellent. Well, as Jeff mentioned today, I'm going to be talking about WealthCare, and this is a great opportunity given the timing and circumstances in the market and climate we're facing today to talk about a product that can help suit multiple client needs. WealthCare is kind of unique in the industry out there, so I'm really happy to be able to share this with you. First, as I jump through here, I wanted to give you a little bit of a heads up on Sagicor. So Sagicor is the company I work with. A lot of people have not heard about Sagicor, whether you're an advisor or a client out there, but Sagicor is actually one of the oldest operating insurance companies in the Americas. We were started in 1840 in Barbados, making this our 182nd year in operation. And the U.S. operation dates back to 1954. So we're rated A minus, been operating for years. And the fact that we have a parent company that's been around for so long has helped us bring some unique tools to the marketplace, whether it's our accelerated underwriting system we call accelerating. I'll talk about that in a second as far as how that relates to wealth care. And it also gives us opportunity to have unique products like wealth care, which is kind of a differentiated asset you can have in your client's portfolio. What's great about wealth care is it's a good solution for those lazy assets a client has. That savings that's kind of for emergencies or just in case, because it suits multiple needs, whether it's helping clients with chronic care down the road, gives them the flexibility to take money out because that's 100% return of premium from day one. And all of that's wrapped into a death benefit. So when they do pass away, it passes away efficiently and leveraged up for their heirs. So it's available through age 85. And like I said, it's 100% return of premium from day one. Your clients, under any circumstances, will never get back less than they put in, along with having the protection along the way. What clients really love about it, and what advisors love about it right now, especially in this age of COVID, is the fact that there is never a telephone interview or a senior supplement. There's never an exam if you go through our accelerating limits. So you can help position clients into this without the need to be face to face. So they can sign remotely from their house. You can have a Zoom call with them or just talk to them over the phone about it. And they don't have to have an examiner come in this age of COVID.
That's great.
Everyone's still, especially older, trying to keep a little bit of safe distance. So this really helps enable that through the whole process. And that's with an e-app to start with, all the way through e-policy delivery at the back end. So it's a very quick, seamless process that's very non-invasive and very much like selling a fixed or an indexed annuity. Another great feature about this I mentioned is the chronic illness rider. Now, before I go any further, I do want to say it's not available in California. We are working on that, but it's available in all other states that we do have this product available. And what's great about it is you can accelerate up to $500,000 of the death benefit for a 48-month benefit period. Now, there is a residual death benefit, $25,000 to keep the policy open, but this gives great flexibility in case clients need care. And it's activating. I'll show you some details coming up, but with just a loss of 2 of 6 activities of daily living, but I'll show you a case and we'll go through a case study where you can see where this can really help out.
I love it.
Now, I mentioned this is through our accelerated underwriting program at Sagicor. We call it accelerating. We've actually had this system in place now for over 7 years. So by industry standards, we actually had the first or one of the very first accelerated underwriting platforms out there. So what we do is once you sign up with the client, it's an automated underwriting system that we developed in-house. It pulls a prescription check, a medical information bureau, motor vehicle records, and ID Verify to take all that information, run it through our underwriting engine to try to give a client a decision, an underwriting decision within a couple of minutes if possible. Now with WealthCare, it can take a little bit longer because those clients tend to be of older ages, but we tend to get underwriting decisions done even if we have to go out for medical records. Wow, I've been talking about this a lot lately. I was talking to Jeff earlier
Feel
about
free to
that.
take a drink if you
Um,
need.
yeah, we've had this out there. It might take maybe 10 days to a couple of weeks to get one of these approved.
Well, that's pretty quick,
Mm-hmm. Especially for
especially
older
right
age
now when it's
clients.
so busy in the industry. That's really quick.
Yeah, and it's actually our underwriting time on this, even with that, in the business out there, has actually been decreasing. So it's been very good.
Good.
And for client, if they're signing up remotely with us, they can just do a digital signature through email. If you're with them in person and have a tablet, they can sign with their finger on a tablet, or they can click the mouse or use the keyboard. So it's super easy. It's all e-signatures all the way through, and
Very
it's a
friendly.
very seamless and quick process.
Good.
Now, there are a lot of opportunities for growth beyond safety, which in today's climate, with the volatility of the market, everything going on, and rising interest rates, and if you have clients in safe, let's say, bond funds out there, we know with interest rates rising, those yields on bond funds are going to go down. So that's not really where we're going to have funds. Not that we're going to talk about that, but there's a lot of great opportunities for growth in this. And we've partnered recently with BlackRock to basically use their iShares platform. And with that, there's the environmental, social, and government. There's a variety of different ones we use. They're mid cap, and then also emerging markets. And also, if you want to focus on the U.S. market, we have strategies that are focused here with S&P, using the S&P 500 index, both capped and uncapped strategies. So there's a variety of different ways to have competitive growth for your clients. I'm not going to go through all the rates or anything
Yeah, they're on the
with
screen
it.
there.
But yeah, there's a variety of different opportunities beyond just having a guaranteed fixed rate. We do have a fixed rate too. You can see at the bottom, which is 2.25% guaranteed for a year. So the focus is really on that index growth and that downside protection.
Yeah.
Now, I mentioned earlier the chronic illness benefit. Now, if it comes to the point where your client does need care, our chronic illness benefit is one of the most flexible and easy to use out there. As I mentioned earlier, it's a loss of two of six activities of daily living: toiletry, eating, mobility, that sort of thing. But what's great about ours in a tough situation is the fact that ours is more flexible than most. Whereas most chronic illness writers or asset-based long-term care products out there have the expectation of permanent impairment, our expectation is only 90 days. So if you think
Okay.
about that, Jeff, in terms of a client who maybe slips and falls and they break their hip or injure their back, but they're expected to recover, a lot of chronic illness writers out there will not pay a benefit where ours will. And the great thing about ours is it's a one-time qualifier for the life of the policy. So
Oh,
once
wow.
your client qualifies for this benefit, they could actually stop receiving payments if they want to and start receiving them down the road again without showing proof that they're still impaired or proof of a new impairment. So it's completely flexible, where most out there will have an annual checkup to see and verify or re-verify that they're still impaired. So
Yep.
when you think about it, and a client going through needing care, it's usually the most stressful time for the family. And at that point, you're likely going to be dealing with either the well spouse or the adult children. So this sort of a claims process, and there's no reimbursement for expenses. It's all indemnity.
Oh, okay.
So Yeah, with all indemnity. So once they qualify, they can even set up as an ETF, or not ETF, EFT to
Yeah.
their bank account.
See, that's the thing I remember from you telling me. That was a really great feature.
Yeah, so it makes it as easy as possible for the family at that point, and that's who you're gonna be dealing with likely that in that scenario. So as I just mentioned, this is done with indemnity versus reimbursement. So that brings a lot of flexibility, especially at the earlier stages of care. Because at that point, if you have a client or you have a customer who just needs to be checked in on a couple times a day, maybe they want to have some carpet removed or some additional rails put in the house because of a slip hazard, they can use these funds easily for doing that, or to have a neighbor check on them or one of their kids or grandkids without needing to be medically certified. So there's a lot of ways to use these funds instead of more qualified asset-based long-term care funds, because of the fact that you don't have to submit receipts for reimbursement. They don't have to be deemed medically necessary. You won't have claims that are denied. So it makes it so much easier to help care for a family when things couldn't be more stressful.
Exactly. That's exactly when you need it.
Exactly. So just a quick scenario and taking a look at how this can impact your clients. Meet Jenny and Mike. In this case, they're both 60 years old, and their advisor has looked at repositioning $200,000, $100,000 for each of them in their portfolio to wealth care. Now, remember, I said that this is actually an asset in the portfolio because it's 100% return of premium. It's not like they're just paying for something and not getting something in return. They could take their money back anytime. So this is a differentiated asset in their portfolio. And what they're showing here is a summary of benefits at age 85. Now, the green bar represents guaranteed rates, and the blue bar represents the current assumption rate, which is 6.71%. And in this example, I've allocated to the BlackRock iShares Environmental, Social, and Governmental Fund, um, earning 6.71. And for Jenny, at age 85, if she was to pass away, and let's say the index has gone down each and every year, so there's been no earnings whatsoever, she's still going to have a guaranteed death benefit of $211,546. And remember, she put in $100,000. And if you're looking at their conservative money, it might otherwise be sitting in a CD at the bank, might be sitting in a bond fund. That's actually pretty good growth, even on a guaranteed basis. And that's tax deferred and goes tax free.
It's beautiful.
On a current standpoint, if she was to earn that current rate, it would be $359,213. So she'd more than triple her deposit tax free to her beneficiaries. And Mike's numbers, you can see, are similar. They're a little less because he is a male and this is an insurance product. But when you consider looking at this as far as tax efficiency compared to using an annuity that would be taxable at the end, this actually works extraordinarily well.
It's beautiful.
Let's say at age 85, instead of passing away, they were to get sick, because that's more than likely what's going to happen before they pass. Well, if they were to accelerate the death benefit and get that benefit, and this will pay out over a 48-month benefit period. Now, the average stay in a nursing home is about 2.5 to 3.5 years, outside of things like dementia. So this will more than likely cover any needs in terms of a long-term care facility or anything like that. But for Jenny's standpoint, she put in $100,000, and on a guaranteed basis, no matter what, she'd be able to pull out $3,886 a month for 48 months, tax-free, to pay for chronic illness. Based on current rates, that would be $6,963 a month for 48 months. So pretty good efficient use there.
Yeah.
And again, Mike's numbers are just a little bit less than that. But remember, it's all backed up by being a 100% return of premium. That's what makes it a differentiated asset. Worst case scenario, they can get their $100,000 back if there's never been any sort of growth over the years. And if that's the case, then financially, the country overall would not be in great shape.
Right. The ROP is loved by I don't know anyone who doesn't like an ROP.
Exactly. And ours is from day one. So we're not staging that out over 3 years or anything like that.
Very
And
clean, very client friendly.
yep.
That's
For Jenny, though, if it was based on current rates that they earned, she'd actually pull out 234,580. So she'd still more than double her money and have access to that to do whatever she wants to at that point. And Mike, at that point, he'd pull out 227,419 based on the assumed interest rate. So again, they have conservative growth, but they do have growth and be able to pull that out. And this is just a summary page. This is actually in the illustration to help clients and to be able to help advisors walk their clients through it. This is showing, in this case, 60-year-old, $100,000 going in, face amount 211,546, and it's showing a summary at age 85. Now, what's nice for the advisor is they can tailor and change the summary age depending on their client's circumstances. So they can move that age out, they can move it earlier, depending on, their health history or whatever the case may be. But you can see 417,000 would be the death benefit based on current rates. Cash surrender value 306,702, and accelerated death benefit, they could accelerate 392,993, which is that 417,993 minus that $25,000 residual death benefit I mentioned earlier. And they'd have a benefit for chronic illness at that point of $8,187 per month. So I think it's laid out pretty well to be able to walk the client through that and show the benefits and how many different ways this can help them reach their needs.
I don't know who put this page together from your company, but it's amazing. It's very well done.
Thanks. I'll definitely share that. But yeah, we worked pretty hard on it to get that there. And I think it really helps give the advisor a roadmap to share that with their clients. And it's worked really well with the feedback we've gotten.
And that's part of your illustration that comes out.
Yeah, that's illustration. That's client approved. That is a direct screenshot from the illustration page.
Yes, that's what I remember. I remember that screen as being one of the most impressive we looked at when we talked about this product.
So hopefully for your advisors, if they're looking at it and they want to figure out where to find funds to use for WealthCare and how to meet their client needs, just remember there's over $7 trillion sitting in cash deposits and similar type instruments sitting on the sidelines. And that's really jumped up since COVID. And actually, with the market volatility we've been seeing lately, there's been a huge rush to cash for people trying to lock in those gains for that, market over the past 10 years or so. So there's a lot of money sitting on the sidelines, and CD rates, as we know, we're still lagging behind. So this is a great solution for that money. If you have people who normally would be looking at an annuity, whether it's a fixed annuity or indexed annuity, stuff that won't be used for their specific income now, but being saved for rainy day down the road, whether they get sick or they're going to pass it on to their heirs, it's a great solution for that because that brings in the tax efficiencies in a life insurance wrapper, and be able to pass it on and leverage it up for care if they need to. It's also great for existing cash value life insurance policies. So if they have something that's underperforming, an old UL policy that they might need to do something with, it has a premium that's ongoing that they don't want to keep with, putting it over to a single premium solution where they don't have to worry about it, or maybe pick up living benefits along the way, it's a great way to go. And then also, of course, anyone who's getting an inheritance or cash windfall, everybody likes those. I'm still waiting for one. Just kidding. I have none coming.
It's not like my dad who said he's going to go owing $1 million, not leaving $1 million.
Yeah, so there's a variety of different ways to do it. But yeah, just give Jeff and Darren, the team at FSD, a call and they can help structure this for you.
Absolutely. And you're available if they have specific questions or more detailed questions as well.
Absolutely. Absolutely. So I'd be more than happy to talk about a case and walk through the product, anything that I can do to help. I'm more than happy to help with. So
these are
that's about what I have. Any questions, Jeff, or anything?
Yeah, only one question that may pop up from people who are not familiar with the indexed part of this, that this is a life insurance policy. It's not like a fixed indexed annuity where these are broker dealer registered or anything. These are free for all agents that are life only licensed to freely market and sell, once they're appointed, of course, and trained up. That's
Absolutely.
correct.
Absolutely. That is correct. These do not have to go through a broker dealer, traditional life insurance license. That's all you need. You don't need a long-term care license either, just traditional life. So if you're licensed for fixed annuities today, you're licensed for WealthCare.
That's beautiful. That's great.
Yep.
And with a great company, Sagicor has been around for so long. And that really great illustration we can run for you. And yeah, I love it. Ray, I love it.
Wonderful.
Yeah. Hey, well, I guess that's it. I want to thank you so much. That was so good and quick. And the main reason, agents, everyone, this is why I wanted to have Ray on, because all that stuff he told you, we've met with him a few times, and it's great. But there's no way I could put it out in the same way Ray does, who works with it every day and is seen so many different scenarios. So if you have any questions, give us a call, and if for some reason we can't answer, we're going to reach out to Ray, or we'll share with you how to reach out to Ray. If you have any of those really hard to place cases, we'll do that for you and all that good stuff. And Ray, again, I just want to thank you so much for your time, always,
Oh,
forever.
anytime,
And
Jeff.
we love working with Sagicor. And, Sagicor also offers a great MIGA. They have SPIAs, immediate annuities, lifetime, and period certain. And I think your period certain is pretty unique by the time you can go, right?
Exactly.
There's a long time on that. So yeah, if you have any questions, please feel free to give me a call. And in the links in the description, I'll have the brochure and maybe a sample, definitely a sample illustration for the IUL product, and all that good stuff. So when I publish a video, check out the links in the description. We'll have financials to Sagicor, and I will definitely have a link to Ray's LinkedIn page and some of his contact information. I'm sure that's fine with you, Ray.
Absolutely.
Great. Well, again, thank you so much. I'm going to go ahead and stop the recording now, and we can chat for a minute. Ray
Wonderful.
Taylor, Sagicor, again, thank you very much for your
Thanks,
time.
everyone.